What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content. Good morning, everybody. Happy Monday to you. Hope you all are doing well. I had a really busy and fun weekend. We have some friends. They are Indian, and we went to an Indian engagement party, and it was so much fun. And then we went on Sunday, for Father's Day, my dad and my brother and I, we went up to some property that my family has, and we were driving dirt bikes around and just having a good time. It was a great weekend. Hope you guys also had a nice weekend. I was away from the charts big time. Usually, I just can't keep myself away from stuff. I'm either back testing or I'm either, building something on our website or tinkering with the Edge Finder. But every once in a while, you got to have a weekend where you're just no charts, no nothing, other than the Sunday video that I always do. So anyways, let's take a look at some stuff. We are getting into a new week, more chaos headlines back and forth over the weekend. And once again, man, it's like clockwork, right? You get the Saturday, Sunday worries coming in. And then somehow that Sunday open, you still find a way to rip higher on news that comes out that is more promising. It is a very consistent pattern, like uncanny, how consistent that theme has worked out in the last few months, where you get the Sunday freak out, or I should say really the Saturday into Sunday freak out. And then Sunday night futures market opens up and good news drops 30 minutes before. That kind of took place, where I really was more like an hour into the market opening. You had some positive news that US Iran were going to work things out. And again, we're back and forth, but it does still seem, despite the kind of last second pull away from the deal, it looks like we're back on track again. So hard to tell exactly how it's going to play out. We've been back and forth countless times at this point from both sides, right? It's not just Trump. You have both sides kind of like stepping away entirely and then coming back, stepping away entirely, then coming back. And it's really difficult to know where all that's going. Dollar is still firm from last week. We had a really good, couple of days here for dollar bulls out there. Last week was a big win on that side of things. I closed out entirely of my pound short positions. The prime minister resigning in the UK, pound is up in response to that news. Although I listened to Forex James talking a little bit about this. He made a good point. He's like, the problems, the challenges faced by, sorry guys, 1 second. We've got a couple people out on the stream today. We're trying to coordinate live stream lineup. I listened to Forex James, who comes on the show often. He's one of our regular hosts if you're newer to the streams. And he was talking about, the challenges faced by the UK. I mean, we can actually take a closer look at that. Let's go to economic heat maps. We'll go to UK. And while the data has been coming in better than expected, if we take a look at the absolute state for a second, actually, I have a better chart for this. Let's go macro scanners, economic strength. From a macro perspective, the UK has some challenges. GDP growth at 0.6%, while simultaneously having CPI at 2.8, interest rates elevated, unemployment 4.9. The UK faces some challenges. One of the big ones is that they have a lot of national debt and not a lot of growth, like not a lot of economic growth. They also have sticky inflation that they're still fighting and dealing with. And so you look at that and you say, okay, even if you change prime ministers, the underlying circumstance of the UK economy is challenging. Nick, your face is too bright. Let me see if I can change my thing here. Hold on. I've got my headlight. If I can change the temperature here, maybe that's better. I'm still too bright. Oh well. So anyways, the challenge for the UK is a lot of inflation and not a lot of growth. And that dynamic is very, very hard for, regardless of who you put in administration wise. I mean, the US faces a similar issue. Like, you have ginormous national debt, but the difference in the US is that there's actually decent economic growth. Like, the US is still central to global trade, global capital markets, etc. Anyways, hold on one second. I think that might be a little bit better, hopefully. Yeah. So euro dollar is down here today, just slightly. Like, there's still a bit of dollar strength coming in today, if I'm not wrong. There was earlier. Yeah, dollar's flat. So I think if you're looking at dollar index, you have some critical levels of support looking left. Like, we have this past level here that could be interesting to watch going forward this week if you were to get a little bit of pullbacks in the dollar. Gold here continues to be mostly under pressure, though it did catch a bit of a bounce on the open. So I thought we would see lower lower prices in gold on the open, and we did briefly, but the headlines changed very rapidly after the open, and that was more of a positive factor for gold. However, there's a level that I'm watching on gold that I think is really worth keeping a close eye on, and that's going to be this 42.20 level. If you look left, we had the big gap, right? Big gap. We faded through that gap, bounced off of it, came down to it, broke below it, right? So that was a critical spot that we bounced and then we broke through. So now we're retesting it from the bottom end. And the question becomes, is that same technical area going to act as resistance and to continue to push us lower? My opinion is, I think more than likely, yes. But as always, we don't know with certainty, right? I clarify that almost every single day because I know there's a new trader here who is watching for the first time ever, and they've seen all these gurus on social media, touting how good they are, making money in trading, etc. Trading is ridiculously hard. I will always try and keep it real with you guys. And when it comes to my ideas and theories, they're just that. They're ideas and theories. I have educated guesses that I make, but I'm not certain with anything when I take trades. So I'm still short gold. I've been sitting in this trade for, I guess, like a week now, 2 weeks maybe. No, only like 6 days. So I've been in the trade for not that long. It's been a really good one. I am looking for this critical level here to now hold as resistance. I think most likely, not with certainty, but most likely, I think we're headed back down to the lows. We've been in a downtrend on the 4-hour and daily chart, but let me tell you how I would be proven wrong by this. How would I know that price action completely disagrees with my thesis? Because there's always people in the comment section who's like, no, Nick, you're wrong. It's going to rip higher. Or you're right, Nick, it's going to rip lower. None of us know with certainty, right? What proves me wrong in my analysis. And I think every trade you place, you should be thinking about that. Like, how do I know I'm wrong? And what do I do if I'm wrong? So if I'm looking at this, okay, I've got this area, I've got this area. These are pretty critical spots. Like, I'm generally expecting gold to react negatively in this area, right? So I'm going to keep my stop where it is for now. And what I'm going to say is, okay, I think we're going to react negatively to these spots. But if we start to fail out at holding those areas, then that nullifies my thesis. And in that case, I am wrong about thinking gold could continue lower. In fact, if that starts to happen, if you start breaking above 43.60, etc. on gold, then I have to contend with the idea that, okay, we might actually be having higher highs, higher lows. Like, this may be forming a higher low. But it's way too soon for me to say, yeah, this is a higher low right here. We know this is a higher low. No, we don't, right? We do not. This could just be a minor pullback before we continue, right? So we always have to keep an open mind of, what if we're wrong and what if we're right? So what would being right look like? So now I know what I'm going to do. If I'm wrong and price rips higher, it's time to cut the trade and get out of there for a very small loss at this point. Like, I trimmed my initial risk. I have low risk on the table, which is great. What do I do if I'm right? What if I'm correct in thinking that this is a minor pullback to a resistance point and we actually move lower? Okay, so in this case, if we take out these lows, I'll tell you right now what I'm going to do. I'm going to take this stop loss and I'm going to bring it on up and trail it behind what is a lower low and lower high, right? So that's how I would manage this trade this week. So there's my game plan for gold going into the week ahead. Either I am wrong and we rip higher in gold, in which case I cut the trade, take a small loss, or we roll over, continue in the direction that I think we're going in, and I bring that stop loss into profit. What if we go nowhere this week? If we just do this, then I do nothing and I wait. That's it. Does that make sense? Hopefully that breakdown in gold was helpful. I know there's a lot of people who trade gold and watch the channel predominantly for gold. Fortunately, it is what I trade most often, I think. I think I trade gold a lot. I trade the indices a lot as well. But gold is certainly recently, gold and silver are certainly the most traded things for me recently. Big win here for the bears was breaking through this zone here, right? We gapped up, filled the gap, and have stayed below that. I generally would like to see this area hold, but I'm comfortable holding the trade as long as we stay underneath this resistance. Does that make sense? By the way, guys, if you're enjoying the stream, do me a favor, hit the thumbs up button, subscribe, all that good YouTube stuff. It helps out the channel tremendously, and I really appreciate it. By the way, we're also doing a giveaway that's ending really soon, actually. If you go to a1trading.com, check this out. We just started something. If you go to under prop firms right here and go prop firm giveaways, check this out. It is live, ladies and gentlemen. I'm going to drop the link here in the chat also, just to make it easier for you. You can currently join our giveaway that we're doing completely free. Here it is. Head over to a1trading.com/giveaways. We are currently giving away today, in 3 hours and 16 minutes. Our system is going to randomly select a winner to get a free 10K one-phase challenge with DNA funded. This is, again, giving away today in 3 hours. So if you are not already entered, there's not that many people in this because we just launched the giveaway. You actually have a pretty solid chance of winning if you enter right now, because there's not that many people in the giveaway. I think there's like, I don't even know. There's like 50 maybe in the giveaway last time I checked. So there's a good chance. Throw your name in the hat. You might win something. And let me tell you something. Let me put you on some game, okay? We're doing this weekly. So bookmark this page and come back each week. You might start winning something, and it's free to join. There's no, all you put your name and put your email in, you can win Of course, it's completely random. There's no, intervention. It's just we built this automated system over the last few days. I love building these sort of things as a software engineer. It's like so much fun to build. But me and my team have been working on this, and it is now live. And so the cool thing here is that like sponsors of the show, they give us free challenges to raffle off on our website. So it is, like I said, it is 100% free to join. Link is in the chat, or just head over to a1trading.com/giveaways. If you try and repeat, now what's cool about the software here is if you try and gimmick it or scam or win, like by cheating, like throwing in 30 emails at once, it will automatically disqualify you, which is awesome because we've had a lot of people who try and cheat, and it's very obvious when people try to do that because you can track all sorts of details on what people are doing there. So our system, we've automated the cheat detection stuff too. So anyways, there's your chance to win a free 10K one-phase challenge today. The giveaway will go off in 3 hours, and it will announce on our website, which is so cool. Nick, which podcasts do you listen to? I don't listen to a lot of podcasts. I do listen to some CNBC stuff just for like news and like commentary on what's going on. Let's see, gold, silver. What about oil? So oil was up in the Sunday open and has faded very quickly back down, trading around 74.65. This is pretty benign. We're not too worried here, I think, with oil prices. In fact, anything, oil still looks like it's in a bit of a downtrend. I think if you're an oil bull, you want to see something like this. You want to see break back above the 88 level. I think that's big for U.S. oil. Oh, some of you guys entered the giveaway. Awesome. Nick, is there a reason COT reports weren't published last Friday? Yes, U.S. holiday. They postpone during U.S. holiday weeks. Juneteenth on Friday, postponed it. I believe we'll get it today. And our software, if you have Edge Finder, our software automatically updates it ASAP whenever it reports. So yeah, we don't have it yet. It will update later today. At least it should. 10-year yield actually firm today, moving higher. This continues to sort of signal that Fed hawkishness, I think, is continuing to surprise market participants. I want to be short bonds, to be honest with you. This trade looks really good. I'm kind of annoyed that I got stopped out of this idea. I was short TLT, got stopped out on this move here, and now it is rolling over. Story of my life. So yeah, we are looking at bonds. Like a little bit of a fake out here, right? You had TLT break away from this move. Now we're back below it. I'm not opposed to potentially just rejoining my short position with a stop above here, but I'm going to keep an eye on it. In fact, let me look really quick. I haven't looked at the bond scorecard here in a couple of days. Let's just take a look here. Yeah, so Treasury is still getting a bearish read, -7 here on Edge Finder. It's a pretty solid read. I do actually like the short bonds play and may rejoin that trade. Thesis basically being we held this area really nicely on the 10-year. 10-year yield looks to me like it's probably headed back here, then to here. That's, again, kind of in line with my dollar bullish thesis. I do still have quite a big number of trades that are long dollar exposed, which is very similar in a lot of ways, usually, to thinking yields move higher. They do tend to move directionally together. Thoughts on the Canadian dollar? Seems very interesting. Do you listen to Joe Rogan podcast? No, I mean, I have in the past, off and on. Some episodes I've liked. I listened to it a lot more in college. Let's see. So the CAD, the Canadian dollar is getting crushed by the dollar. Dollar looks fantastic. I wanted to be in this trade for a while. I think it's still probably bullish on Edge Finder. It's been bullish for like, well, let's just take a look. Okay, yeah, so it's actually not been as bullish as I thought. We were bullish here early June, mid-June. We got readings there, but nothing since. So not a huge interesting currency pair to me right now. On currency side of things, I am more interested in things like dollar yen longs. This is getting a solid reading on Edgefinder. And then pretty much all the dollar crosses, except dollar CAD. I don't really care too much for CAD. Pound dollar bearish. I may look to rejoin that trade if you catch a big enough bounce today. Like if pound dollar makes its way back up into, I am fully out of this trade, by the way. So I took profits on pound dollar. So if it bounces, I could be looking at this area. This was a pretty big level of resistance. So I'm going to keep an eye on this zone here. The other spot would be if you were to fail through these lows, a retest into that area looks good, and a retest into this area looks good. If I take that trade, I'll share it in Discord. I'm going to keep an eye on it. I do like the short continuation plays. I did really well with pound dollar. I mean, pound dollar has been one of my better performers in terms of currency pairs that I've traded this year. Predominantly to the short side. I don't think I've had any longs this year on pound dollar. I've been pretty consistently dollar bullish, which has worked out decently well. Not the full year, right? This had a nice shoot to the upside, but generally speaking, we've mostly faded pound dollar, and that's been working pretty well. You think Bank of Japan will intervene? Yeah, this is an interesting thought process for me. I know that's a lot of people's mind. Like Marco, I know he's talked a lot about like Bank of Japan potentially intervening here. I think that's a reasonable thought. But like to me, the fact that it's staying up here right now is a bit concerning. Like I think you could get drops, but my bias would actually be continuation. The dollar just looks very strong. When we look at the dollar, right, we talk a lot on this channel about macro being so critical to the flow, right? The directional like trend. If macro keeps coming in, beating expectations for a currency or for a commodity or for an index, etc., so often it's just a flood one direction. Like that's why I would argue the dollar has been really strong. It's not geopolitics have freaked people out and they're rushing to the dollar. That's a piece of it, sure. But it's this +7 score. That's what's driving the dollar. You have inflation coming in higher than expected. The central bank here in the US last week was resoundingly more hawkish than what people had expected. The bank, the votes that they cast as a committee, and then Kevin Warsh's commentary, like that is what's driving the dollar. Like put everything else to the side, put your technical analysis, your support resistance, your RSI, your ICT, SMC, whatever, your moving averages, put all that to the side. The dollar's driving because monetary policy looks more hawkish. Like it moved to the tick, like to the moment that we got that vote, the dollar has trended in one direction. Like that's why it kind of, I can't, when people say like macro doesn't matter, I'm like, bro, it is literally like you can down to the millisecond macro drives prices very hard, like more than anything else. If the Fed says something that changes the game, that is macro, and that is absolutely driving of price. So when we look at this, we have stronger than expected PMIs, retail sales, and consumer confidence. We had PPI come in higher than expected. CPI was mixed, if anything, maybe slightly more dovish. It was slightly softer than expected on core CPI, I believe. The 2-year yield stronger than expected, or I should say rising, trending higher off of Fed commentary predominantly. Non-farm payroll came in better than expected. ADP better than expected. JOLTS job openings better than expected. So what I'm pointing out here is that the macro has synergized really well. And that is arguably why the dollar has been such a trendy thing recently. Like I love when the dollar does this. I love when you pull up Edgefinder and you have something like this. Check, check, check. I love that because that to me makes it a lot easier for me to build a bias. I feel that I'm trading like the wind is in your sail when you have all the macro beating expectations. Now, it doesn't mean it's going to be smooth sailing all the time. Doesn't mean every single time you get this, it's easy money. No, not at all. Nothing in trading is easy. It is always hard, no matter what anyone tells you. Trading is difficult. However, what I try to do and what we try to do as a company building these sorts of things, we try to make it a little bit easier by scanning key economic data and building, you know, that directional wind in your sail type of concept. So if you're asking me, like, where do you think the dollar's going? The answer for me is going to be higher until the macro shifts. Like, if you start to see jobs data come in worse, if you start to see inflation cooling, there's no loyalty to dollar longs for me. It's just trading. Like, I'm just trading the macro direction and I'm trying to ride the wave. And the wave right now is up. That will change at some point. I don't know when. So pullbacks are buy the dip opportunities, in my opinion, until proven otherwise. That goes for gold, currencies, etc. So if I look at euro dollar, right, I'm still short euro dollar. When I look at pound dollar, I'm looking to re-enter. I took profits on my trade fully, looking for a chance to re-enter. Maybe I'll go short again. Dollar yen, if it pulls back, again, not overthinking. I'm just sticking with the directional bias that Edgefinder is assisting me in building. It doesn't mean it's a 100% win rate. I always have to clarify that, because a lot of times people are like, you know, people, especially when they're newer to this stuff, are very impressionable. It's very, people think like, oh, Trader Nick says he's bullish on the dollar. That means the dollar's going to go up. Not at all, right? There are many, many times where I have a thesis, I post about it online, and I'm dead wrong, and my comment section gets flooded with hate. I mean, not actually. It's really not that bad. But I do get like a lot of people like, you thought it was going to go up. Yeah, I was wrong. Like, I'm wrong often. Next. At the end of the day, like, that's trading. Trading is not being right all the time. Trading is making it count when you are right and making the bleeding stop when you're wrong. That's it. And keeping trade size small is the critical component. Like, if you take one thing away from today's stream, take a hard look at your position sizing. It's probably where a lot of your issues are stemming from if you're in a challenging spot with your trading. I'm willing to guess, from personal experience and from the countless conversations I've had with many traders, position sizing is the problem for 95% of people's issues with trading. How many of us have been stuck in a bad trade and would have been far better off if the trade size was just not huge? Like, if it was small, wouldn't things have been a lot better? Oh, and then people are like, no, it's my trading psychology. BS. It's your trade size. Because if your trade size is small, your trading psychology is going to come a whole lot easier. What's freaking people out is when their trade size is huge. Like, if my trade size is too big, after all these years, I'm still like, oh my gosh, this is uncomfortable. I don't care. Like, I'm not the world's greatest trader, but I have a lot of experience. I've done this for a very long time. I'm a profitable trader. I've poured my heart and soul into doing this. Okay. If I have a size that's too big, it emotionally still does not feel good. So it's not your trading psychology. That's human nature. You can't change that, but you certainly can change your trade size. You can definitely size down, and that's going to make you way more level-headed. I don't care. You can rebuttal me all day long. I don't care. At the end of the day, trade size is like 99% of people's problems. They trade too big because they want to make money quickly. They borrow margin. They scale up way too quickly when they're not really ready for it because they want to make money quick. That's, if you could just take one thing from today's show, try it for a month, 2 months, come back, tell me I was wrong. Try to reduce your size to the minimum and see what happens to your trading psychology. See what happens to your trading. You know what happens when you trade really small? Because you're not so obsessed with your P&L, you just start getting obsessed with the process. You just start getting obsessed with, is this a good trade? Like, let me map out. Does this make sense? Could I present this to my girlfriend or my wife or my mom or my brother or something? And it makes sense. Like, it's simple enough. I'm straightforward. I can show consistency if I were to present it to someone else, right? So I don't know. That's my challenge for you. Try reducing your size to minimum. See what happens. I'm telling you, it is. If you, but I know what the people like. People's response to that sometimes be like, "Well, then Nick, I'm never going to make a lot of money from trading." Bingo! It's going to take a long time. Trading's hard as anything. Okay, you're not going to make money quickly from trading unless you already have a bunch of money. Sorry, like I'm on a rant today. I apologize. I'm not trying to like dash hopes. I'm telling you, if you really like trading, there's a path for you, but it's not trying to size your trades up huge. Will people tend to full margin to win quick? All the time, man. I mean, everyone is. I gotta like the people resolve to. I have someone in my Discord right now who's like is like bummed out. They're sending me messages. They're like, Nick, are you telling me like I can't get like a 80% win rate on a 1-to-1 risk to reward ratio? I'm like, no, that's like impossible. No one's ever done that consistently over many years and proven it. A lot of people claim, a lot of people in Discord servers will say, yeah, I can do that. Well, then show us your track record. And nobody can, right? It's going to be hard. It's going to be a long, arduous journey, but there is upside to it. There's a tremendous upside. But if you have the mindset of thinking it's going to be easy, quick, I'm going to make a lot of money from this, and I'm going to live that Instagram lifestyle, you're polluting your brain with that stuff. Unfollow all of those people. You'll be better off. Anyways, guys, we have our next show host starting here in just a second. Before I move on and bring on James to the conversation, real quick, I just want to remind everyone that our VIP sale is ending soon. We are currently offering a 40% off discount. If you want to trade with me and the team, if you're here for the long term, okay? Again, after that conversation we just had, we've had some people in the Discord for years at this point. We go through every trade that we're taking, full context, breakdowns, analysis, entries, exits, screenshots, journals, index trades, commodity trades, Forex trades, stocks and options. We have traders in each of the major trading sessions. We have a team of experienced veteran traders with track records. If you are interested in a more elite level trading signals service, it is not your demo profits, fake get rich quick type stuff. This is a real trading community. If that's something that would be interesting to you, it is currently 40% off, but for stream viewers, we're offering 45% off and payment plan options if need be. I'm going to drop a link here in the live stream chat to where you can actually get access to that. Give me 1 second, pulling this up. Okay, there it is. Boom. If you're interested in getting access to that, chat with our team right there. They can get you set up with extra discounts, payment plans, etc. Okay, guys, up next, we are going to have James from Elite Traders taking over the stream. Don't go anywhere. He's going to be talking trading setups, ideas that he's watching in this market currently. Check it out. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hello guys, apologies. I'm having a bit of a technical issue with my camera. Just bear with me. I'll try and fix it while we go. How's everyone doing? Hope you're all well. How do I do this? Tricky. I'll tell you what, let me just do this. I apologize. Happy Monday, ladies and gentlemen. Currently in a euro dollar position. But hold on. There we go. That should work in a minute. We'll see. We'll see. Anyway, whatever. It is what it is. I'm sure you don't miss seeing my face too much. So let me just close something here. There we go. We're on track. So euro dollar shorts are running really nicely. I'm going to try and get my camera back to keep keep patient with me, please. Typical. It was working in the waiting room, and now it seems to have turned off. It's typical. I'll tell you what. We'll use a FaceTime camera. There we go. I need to turn that on for you. There we go. Okay. There we go. Better than nothing, I suppose. At least we can see each other, kind of. So euro-dollar shorts still remain very bearish with a -10 score. So I'm not looking to really do much on this position. I have trailed my stop slightly here to 1.162, which is just above the previous highs that we've formed. We are seeing the US dollar continue with a little bit of strength into today, but nothing too crazy. Obviously, we had the US holiday on Friday. So yeah, I mean, we're not seeing much follow through. We did see the what's the word? We did see the dollar strengthen on the back of FOMC last week, which was Wednesday. Continuation to the upside. However, the big question now when it comes to the dollar is, are we going to break above 101? So obviously we've been seeing the US dollar rejecting this level for over a year at this point. So it's kind of natural as traders to want to see this level break, to see very likely an injection of sort of liquidity and volatility in the market, because what you don't want to do really as a trader is get overly exposed to the dollar. Obviously, we've got strong US dollar data, which I can show you here. So the US dollar currently is bullish with a score of 7. So fundamentally bullish. And we've also had the Fed that's pivoted hawkish as well. So the stars really are completely aligned for the dollar to continue higher. But again, as I was saying, on a technical basis, what we don't want to do is get overexposed to the US, and then we end up seeing this level reject once again, and we end up back in this year-long range, because then, you know, there's no direction here. So really what I want to see is, as I said, the break, retest, and a continuation to the upside. That could be maybe what we're seeing here on the H4. Although obviously very minor, we've had the break, and technically you could say this is a bit of a retest, but you know, it really depends how you want to look at it and where your levels are drawn and so on and so on. But yeah, for me, I'm happy to stay in euro dollar. It's also a negative swap market as well. So if you're in short positions, as you're basically paid for the whole duration, which is a really nice benefit for the position. Pound Aussie, not looking so good at this time. So we had, what's his name? Keir Starmer resign this morning from the UK. If you guys have been following my streams or my segments for the past couple of weeks, you'll know we've spoken quite a bit about the UK and my dislike for the sterling. And today we've actually seen a bit of kind of a relief rally, really. So, you know, I've seen a lot of posts, a lot of news articles saying the pound is being pressured, the pound's lower, and actually it's just not true. The pound is actually showing strength on the back of this, because we're seeing investors and traders and market participants seeing this really as optimistic. So if we've had a PM leave and we're getting a new one come in, maybe he will do a better job. We're seeing that optimism getting priced in. I don't think that's really going to be a longer term thing. I've just realized I've got the chat closed. I'll reopen it when I finish this point. What was I saying? So yeah, I don't think this is going to be a long-term thing. And I'm not going to go into it too much because, again, as I always say, I could ramble about this point for hours. But essentially, actually, I'm just going to pull up a tweet I posted today. It's not a politically charged tweet, but it is more just about the situation that we're currently in. So I'm not going to read this word for word, but feel free to, you know, do what you want. Basically, the UK has got two situations that need dealing with. The first one is basically the living standards that we've got in the UK. So on paper, you know, we look at the hard economic data that we can do on the Edge Finder actually quite simply. So we just go to economic heat maps here. We go to the UK. Wait for it to load, and we can see that actually it looks good. You know, the UK, or the sterling, is looking quite strong with a score of 80%. So why is it such a negative really at the moment? Well, because it's not just based on hard economic data at the moment. I think the more serious market participants, the ones that are actually looking more into the economy and the future projections, it's more of a case of people are struggling. You know, there's people that work full-time jobs that can't pay their rent, they can't buy food, they can't afford their energy bills. And it's a case really of the middle and the lower classes are getting priced out of their homes and their towns. So that's one problem. The other problem is like the civil unrest that we're seeing about immigration, which I'm not going to go into here too much. But over the weekend, we had a bit of an event in Scotland, which again, I'm not going to cover here. If you're in the UK, I'm sure you've heard about it. But the problem is we've got this boiling pot in the UK now where there's just so much anger towards the government and towards immigration. It's not a simple fix. And because we keep losing these prime ministers, we've lost Rishi Sunak, Boris Johnson, Liz Truss, Keir Starmer, and I think there was one, David Cameron. We just don't have solid long-term leadership to deal with these problems. And the longer they're left, the worse they get. So basically, that's why I'm so bearish on the pound, or at least sort of summarized as much as possible. So yeah, I'm basically just betting on these foundational problems just getting worse and worse. And I don't think the PM or the potential PM that we're going to get in the UK is really going to solve much, especially economic wise. Sort of the investment in the UK that's lacking and all sorts of other things. Right. My friend resigned. Sorry, that's my doorbell. I'm not sure if you guys can hear that. Am I still in that pound Aussie trade? Yes, I am. Gold is really favoring my speculation. What was your speculation on gold? I'm assuming you were short. I think one of the great things about this community is that we're all pretty much on the same page. Sometimes that can be bad, when we're all in the same position or looking at the same thing and it doesn't work out, fine. But because we're all on the same page, it shows we're trading similar ways, and the things we cover are all sort of understood and things, which is really nice. I think it's just a good aspect of this community. Anyway, what are we watching for this week? So the Nikkei is looking really attractive. Now the problem is there's no way to get into this at the moment because we're just rallying higher. So we've got this market gap. Typically the Nikkei is pretty good at filling these gaps. It can take a little while though, which is a bit of a downside. So I'm really just waiting for a pullback here, and actually just thinking about it. I need to set an alert for when that does happen. So I'll leave it in about halfway of that gap because I'd love to basically just enter right on this gap, stop loss below the 200 moving average, and just let it continue to the upside. I think that's really the simplest way. I wouldn't like to counter trade the Nikkei at this point. I mean, the trend to the upside is just massive. So it might take a few attempts. If it breaks below the 200 and stops me out, no problem. We can go again once it reclaims the bullish trend. Moving on, the UK 100 kind of looking interesting. So let me pull this back over. Yeah. So on the Edge Finder, the UK 100 or the FTSE is getting a bullish reading of +8, which is kind of rare. I can't remember the last time I saw the UK 100 at the top of the list, like the most bullish asset. So it did pique my interest a little bit. So if we look at the technicals, what I was looking at over the weekend was this pullback here. So obviously fib from the low to the high. The reason I didn't take this trade was because the moving averages are sideways, just showing that we're kind of lacking direction really. And overall, as I mentioned last week, it's just a really difficult market to trade for me anyway. I just don't really find much success trading the FTSE because it's so choppy. We can get quite nice runs at certain times, but typically it's just sort of a very range bound market. I mean, this over here, 1 year, well, roughly about a year's range, 9 months, give or take. So yeah, it's just not ideal. So entering the FTSE in a range bound condition, it's just not something I really want to do. In hindsight, that may be a bad idea, but I just got to follow what I think is right at the time. And then for the rest of my watch list this week, it's basically just dollar longs. So looking for maybe a gold short. I'm not overly interested in going gold short at the moment because I'm already in euro dollar short. And to be honest, there's not really an entry here. So what I've got marked up here is obviously the fib from the high to the low. But I suppose, yeah, the kind of downside of this is it's still a higher low relative to the previous one. So it's not like we've got a new bearish leg and then, we're following a very typical type of trend. So definitely not the best setup I've got. So I'm watching, but again, not overly bothered right now. Australian dollar, US dollar seems okay, but again, I don't think it's the best one. I really like pound dollar to the downside. I think the US dollar, Canadian dollar could also have a decent move, although I'm fairly sure. Actually, let me just double check this. I didn't didn't see this fully, but I'm fairly sure we had inflation news for Canada. So yeah, CPI came down here. PPI. Sorry, hold on 1 second. CPI came up. Getting all my words mixed up. Got that Monday brain. CPI came up to 3.2 from the forecast of 3. PPI came down. Forecast was 14 and actual was at 13.6. So because CPI came out today and it was slightly hotter, we might get a little bit of a support on the Canadian dollar. I don't think it's going to be that much. I don't think it's now a case of the Canadian dollar is something I really want to buy. But there is that idea. Maybe the Canadian dollar is losing a little bit of its weakness. People who move to Western countries should respect our culture and law. Well, I think that idea applies really anywhere you go. You know, like for example, I went to South Korea last year, maybe last year or the year before. I can't remember when. And it's not really a case of you know, I didn't learn the language fluently before I went, but it's more a case of just making the attempt. You know, it's like I think French people are actually a good example of that. They, from what I've heard, I don't want to group everyone together here, but I'm fairly sure French people are a little bit intolerant if you don't at least attempt to speak French, which I think is understandable. But it's more about, yeah, just respect, I think. Will I add to pound dollar a new short position? Yes, but not yet. So there's a couple of criteria I would need to see. So first, I'd need to see the dollar decisively break this level. Currently, it is doing it, but it's a little bit sideways. So we're not seeing a huge push, which is okay. Obviously, it's fine. But I would really want to see it clear this level with some gusto, you know, some strength. So that's sort of criteria number one. Criteria number two is get my euro dollar shorts to break even, because I'm already in 2 positions here. I've reduced my risk, so I'm between both positions now, about 1% risk. So it's not a massive position by any means. However, I would like to get those to break even, and then I also need to see pound dollar actually give me an entry, which would likely be this 50% retracement here, which would obviously line up with the previous lows. So previous support, we've had the break, bit of a retest into the fib, and then a continuation lower. So yeah, we'll see which happens first. You know, if the dollar doesn't decisively break, I might just trail the euro dollar positions a little bit more, or even take profits on one of the positions. That would free up a little bit of my budget to then go into pound dollar. Yeah, it depends on the order of whichever happens first, and how I'll manage the positions from there. So yeah, when in Rome, I've got no idea what that means. Okay, so what do we have? What can we look at here? Bitcoin's still getting a bullish reading. Do we want to trade Bitcoin is the question. I'm not convinced on Bitcoin. We've been paying attention to it really over the past 1 to 2 months at this point. And the problem I've got really is this weekly support level. I really thought if buyers were going to step in, they kind of would have done. So what we saw is obviously, you know, buyers did step in, but they didn't continue higher. They didn't create new highs. They didn't do anything other than reject the weekly 50 moving average and the daily 200 moving average, which was around here. So to me, it's actually looking more bearish than bullish on a technical side. So obviously we're getting these lower highs getting formed. Again, rejection of this 200 moving average. And this is technically now a lower low as well if we're looking at sort of this level here. So I would kind of expect just another lower high to get printed and then maybe a move to the downside from there. The problem is I don't trade Bitcoin. I don't really pay much attention to what's driving it too much. So it's more a case of I've got to kind of just go to the technicals and the edge finder. But in this situation, the edge finder is saying bullish and the technicals are telling me to go short. So I'm mixed on both sides. So yeah, that's kind of where I stand on that market. Do as Romans. Thoughts on Nasdaq? It's a good question. Let's see. What are we looking at here on Nasdaq? I don't think I've really got anything on Nasdaq. I think really the simplest way for now is to be a buyer. So we've got the edge finder that's bullish, which is right here. The same with the Dow and the S&P. So we're seeing risk assets, obviously the UK 100 as well. So risk assets are getting a bullish score. Generally, that's a good sign. We're also seeing Nasdaq hold its trend quite well. It looks like we might actually be on the way to create a new all-time high. The downside, though, is the Fed pivoted a bit more hawkish. So it really depends what side you want to take. I think, again, to keep it simple, the easiest way is to look for long positions. So I wouldn't want to counter trade this. I think, yeah, I would personally just sit out, because again, I don't really want to buy it. I think it's a little bit precarious. But yeah, we'll have to just see. Excuse me. So yeah, nothing personally on Nasdaq, but yeah, I think overall bias is to the long side. It's probably the easiest way. Dollar yen smashing higher. I think actually, is this an all-time high now for dollar yen? Almost. We're almost creating a new all-time high. We just got this little bit over here to make to break here at about 162, let's say. So yeah, again, we're kind of heading into very dangerous territory on dollar yen. It's like we're about to create a new all-time high. Is the MOF going to intervene? There was a lot of speculation over here. Even I was in a short position as well, expecting that intervention. It didn't happen, and now again we are just continuing to rally higher. Are we going to see an intervention? It's anyone's best guess. I would assume so at some point, obviously, but it's then a case of when is that going to happen? No one can tell you with any certainty. So my assumption was at sort of 160, where it's happened previously. That was obviously based on historical data and sort of the statistics, I suppose. Now we're in obviously pushing all-time highs. I don't really see the same what's the same reasoning to go short, to be honest. I think it would just be more of a gamble at this point. So yeah, I'm not looking to do anything. I wouldn't want to be a buyer, again, because of that high risk of an intervention, but I also wouldn't want to sell because it is rallying higher. So I think the best approach for me at the moment is wait for an intervention. If it doesn't happen, fine. You know, what can I do about that? But if it does happen, I can very easily look to buy the lows, or very happily look to buy the lows. Basically the same as what we saw over here on the previous one, when we came down to the daily 200 moving average and just had a really nice bounce off. I think that's kind of the base case really at the moment for dollar yen. However, having said that, dollar yen is also bullish on the edge finder as well. So again, it really depends on your personal risk appetite. James, what can you see on USD CNH? What's good? What good downtrend it has? I'm going to be honest, I don't pay that much attention to China, although I'm fairly sure the edge finder has it. It does. Oh, wait, hold on. I'll keep clicking off. Hold on. There we go. Yeah, so, oh, wait, my bad, I'm misclicking everywhere. So what do we have? So GDP slightly stagnant, 1.3. PMI, or manufacturing PMIs anyway, slight downturn from forecast. What else do we have? Services had a little pop to the upside. Retail sales down. CPI down. So yeah, to be honest, I actually think based on just that, downtrend and short positions make more sense. Again, given the US dollar strength that we're seeing as well, and that the Chinese economic heat map is only getting a 40% score. And wow, yeah, daily trend is very strong. Weekly trend is very strong to the downside. I think, to be honest with you, I don't see another option other than going short. I think being a buyer goes against obviously the trends, it goes against the fundamentals. So keep it simple. Hi James, should we worry about a global recession in the near future? Near future is a loose term. It depends what you mean. If you mean in like the next few weeks, no. If you mean in like the next 5 years, yeah, I think that's a possibility. However, excuse me, when I'm taking a bit more of a pessimistic view on the whole AI thing. We've discussed this. We discussed this a lot previously, but the problem I've really got is that AI companies aren't really doing anything. So you know, you've got SpaceX, for example, that has Grok now, so technically is an AI company, and in their filing or whatever it is that they sent in, it was mainly talking about AI, not rockets. So I think it's safe to classify SpaceX as an AI company technically. Most of their revenue comes from Starlink and the other parts of the company, like the rockets. and Grok are just burning money. They burn more than they're getting from Starlink. Anthropic and OpenAI, they're IPOing as well, or I think Anthropic's planning to, and OpenAI is going to. They both burn money as well. So it depends. If you look at that as a pessimistic view, I think, yes, those stocks could IPO. Earnings start missing, investors get unhappy, stocks start to come down, and that's going to be a real problem, because I think AI companies or AI stocks, tech stocks and things are a huge part of the stock market these days. I think it's like 35%, something along those lines. Again, I'm not a stock guy, so please don't take any of this word for word. Obviously, do your own research. But yeah, I think it could be very similar to sort of the 2000s bubble. But you know, it's easy to sit here and say that, but actually doing anything about it is very difficult. So that's why I'm not interested in actually taking short positions, but I am cautious. But again, this could be, you know, in the next 5 years, 10 years. And I've sat here, you know, in 2026 saying I'm cautious, but then I miss the next 5 years of rally. That could be a situation. That's not the case, because I invest in the S&P on an investment portfolio as well. But hopefully you understand what I'm trying to say there. I know it's a bit of a combobulated sort of explanation. Okay, so we're getting a few chart requests in here, and I've got about 4 minutes left. So Aussie Swiss, US 30, gold, pound dollar. So we discussed gold and pound dollar. Excuse me. US 30. That's also getting a bullish reading on the Edge Finder. And to be honest, actually, an entry here looks a little bit more possible than the Nasdaq. So the H4 is just bounced off this 50 moving average. Not a huge deal, but with the bullish reading, and you know, previously this 50 moving average is acted as quite a nice little support area. So if you could put a stop loss below the 200, even if it came to the 200, you might have survived depending on exactly where the stop was. So it could be a similar, actually I might take this, to be fair. Could be a similar sort of situation here, where stop loss below the 200, allow room for a little break below, like what we saw here, but expecting the 50 to just continue to act as this dynamic support throughout. So maybe something like this. I quite like it. So actually, I'm going to add this to my watch list. As for pound dollar and gold, I think, as I said earlier, short positions still make the most sense. The dollar is showing prolonged strength. The US dollar fundamentally also is good, or strong, I should say. And again, as I've said previously, the Fed is sounding more hawkish as well. So I think everything really for the dollar is aligned for it to continue higher, and obviously then dollar pairs lower, like pound dollar, gold, euro dollar, so on and so on. So yeah, I think that's pretty much it from my side. What else do we have here? Was it Australian dollar Swiss? Yes. So I was long on Australian dollar Swiss, and I cut the position. So that was quite nice. But going forwards, I'm just looking here, because I know Aussie Swiss was bearish on the Edge Finder. Where's it gone? Hold on, I've lost my window. There we go. So Australian dollar Swiss was bearish for a short period of time last week. However, it seems to have dropped off. So this market is heavily driven on the swap rates at the moment. Obviously, we've got the S&B with 0% interest rates. We've got the RBA that's at, was it 4 point something? I can't remember exactly what they are. But anyway, they've got higher rates. So the swap or the swaps you're paid to be buyer is phenomenal. It's basically, it's actually a better dynamic than dollar yen, to be fair, on a swap basis. So although we're currently in consolidation here, I wouldn't mind going back in. So what I would want to see from here is the highs get broken, a new high get printed, pull back. So this would also be a higher low. And then I could draw the fib from the low to wherever the high is printed, and then look to, you know, scale in or add a position here. So I think that's kind of the base case for Australian dollar Swiss, even though, again, it's not a fundamentally strong market to the upside. I think just benefiting from this overall uptrend that we're in right here, this uptrend, and again, that really nice swap that we're paid, it's, yeah, sort of similar to dollar yen. Even if the fundamentals aren't there, being a buyer can still be quite beneficial. Even if the timing might be a little bit wrong and you get stopped out, having that bullish bias personally is what I think is a good idea to do. How long have I been trading? What are your top 3 favorite books? So I've been trading, what are we in 2026? About 8 years ish, give or take. And to be honest, I don't read trading books. I think what's best is to actually learn about money. So I've got a book here called The Rules of Wealth by Richard someone, I can't read the name from here, and The Psychology of Money. Just the two I've got on my desk at the moment. They're pretty good. And the reason I'm talking about money is because it relates obviously to trading. So obviously we're dealing with finance, but also it's about respecting your money and understanding beyond just the risk per trade, but understanding how to think about money, how to manage the money, and so on and so on. So as for trading books, I think it's a little bit of a waste of time, I'll be honest. Almost everything's on the internet. Just go on YouTube. Reading a book will not make you a good trader. It can give you information, sure, but it's not. The only way to become really any good at trading is by actually doing it. Whether it's on demo or a small account or a prop firm, it doesn't matter. It's the same with anything. It's like a sport. You could read all the sports books you want. It doesn't mean you're going to be a great runner. So practice makes perfect. Obviously, you can't be a perfect trader, but you get what I'm saying. So I would actually learn more about the money aspect of the markets rather than really trading itself. Because to be honest, all you really need is the edge finder and some moving averages and a fib, and you'll be all right. Of course, simplifying it. Anyway, ladies and gentlemen, we have got who's on next? Ivan. Ivan is coming on next, guys. So have a fantastic rest of your days. I'll see you all tomorrow. Thank you for being here. Stay safe and don't get margin called.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Hello everyone. Hope you can hear me well. Sorry for the hair. I got out of the sea yesterday and my hair is still messed up, but I am happy to be on the charts and happy to get some alerts on stocks. So what I see, hot crowd. So getting some alerts there, just a second. If you may have noticed, I've started to follow the stock market. So let's see what's happening. For hot, a bit of a breakout up. So let's delete that alert. Crowd. Okay, broke out of this flat range as well. So the strategy for stocks is very, very simple. It's just an added strategy that takes maybe 1 or 2 hours, well, let's say 1 hour per day extra and maybe 1 hour over the weekend to build a watch list. So I'm looking for an uptrend, I'm looking for a consolidation, and then a breakout. I'm in CAT, so this one is working nicely. Running in some pretty decent profit. I'm in GFS, which is working out nicely as well. And I'm looking to enter some more positions. So these are all very small risk. I'm trying to keep the total risk at 1% to 2%. And these are not yet signals in the A1 Discord because this is still a strategy in testing. So I'm doing forward testing, but if all goes well, if the uptrend on the stock market continues, so the main point, the main edge behind this strategy is that the S&P and the Nasdaq continue grinding higher. So let's close this. This is what I need to see. So S&P going up, Nasdaq going up as well, nearing all-time highs. So in those points, as long as there's an uptrend, you can make, I would say, some pretty decent percentage by just buying individual stocks on breakouts. A market condition that is tough to trade is this one, for example. So this one right here. This is tough, okay? And in that sort of an environment, it is not advisable to buy individual stocks on breakouts, because the breakouts will probably not have any follow through. So this strategy does heavily depend on the market conditions. And a lot of traders that I follow, let's say, that are using this strategy, well, they trade during times of massive uptrends. So this one and the current one, but they usually stay mostly flat during times of range-bound price action like this, or falling knives like this, or 2022. So I know 2022 was a pretty tough year, see? Pretty tough year for trading breakout strategies. We can take a look at some moving averages. Were we below the 200 at any point in time? Let's take a look. The saying is, nothing good happens below the 200 EMA. And yes, we were below the 200 EMA. So if the stock market is below the 200 EMA, any sort of a bullish breakout strategy on individual stocks probably won't work that well. That's kind of the methodology. So you have to wait for the price to move back above the 200 EMA, and then you get these massive uptrends, and then you can take advantage of that breakout strategy. So in reality, it's actually pretty simple. So let's put this back to 50. Let's hide this. Getting another alert. What is this? MHCP. Okay, this is actually looking pretty healthy right there. So this could be a good entry. This is a good example, which I'm going to consider executing after my segment ends. But basically, so you get this uptrend right there, and the uptrend needs to be above 30%. So the gain needs to be above 30%. You then wait for a consolidation phase of at least 2 weeks. That's kind of the general rule. This one is 35 days, so it's fine. And then you identify a level of resistance. So this is the resistance level right there. And you're getting a breakout. Another key is to have the price surf the EMAs. So see how it's kind of surfing the EMAs? That's what you need to see. Okay, so it's staying, the price is staying above the EMAs, and it's not really retracing a huge amount. It's not going down by 20 or 30%. That's a big key. So let me just check my broker to see how my actual positions are doing, because TradingView is one thing and then my broker is a different thing, of course. Okay, it's actually working out quite well, which is nice to see. Let's look at DarwinX. Yeah, working out fine. As far as classic positions go, so I have a sell position on USD JPY. So this one is currently in drawdown. The main bet behind this position is a possible intervention from the Bank of Japan or the Ministry of Finance, whatever you want. But yeah, so we crossed the key level. We are now approaching 162. It's getting very, very, I would say, tense. If you look at the breaking news, oh, look at this. Nice animation from Google. But anyway, if you look at the breaking news, you will see suspected JPY intervention, right? So it already happened. A small one, at least, happened last week on Friday. But I think a bigger one could happen. So I want to bet on that. This is small risk, so I don't have like 1% risk on this position. This is very small risk, which enables me to sell even more on some higher levels. So maybe above 163, maybe above 164, I may sell some more. Okay, that's the general that is the general game plan. So I can show you what happened in 2024. 2024, you can see initial intervention, we hit 160, initial sell-off, initial intervention, then we grind up higher, and then we go above. We almost hit 162, we go very close, and then boom, you get the massive intervention, you get massive influx of volume, and this happens. Will they be able to hold it this time? Not sure. I just want to see a pop lower. So yeah, we're approaching those highs. So I want to get this. I'll then take profit. So I'm not really betting on a massive downtrend. I'm just betting on that initial red leg lower. Okay, that's what I'm betting on. Kirtan, hello. Simo, welcome. Digital content, hello. Gamer, hello. Kier, welcome. John, what's up? Andrea says GPUSD pullback to 1.33. Let's take a look. Also, let me delete the alert. 1.33, yeah, definitely achievable. And let me actually put in an alert right there. So let's put an alert here, because I am looking to sell GU once again. I'm still bearish. I'm still bullish dollar. I'm still bearish on the British pound. We're getting a rally because Comrade Keir, so the Prime Minister of the UK, has stepped down voluntarily, which is kind of bullish for the GBP because it puts confidence back into the markets, right? So there was uncertainty as to what will happen. Will he step down, or will he be forced out, or will he stay on for the next 2-3 years? Well, yeah, basically he stepped down, which I think is a great thing for the UK. Like, I've been kind of following the situation. UK is pretty bad. Their numbers are pretty bad. So I think Comrade Keir needed to go. And that was probably the right decision. He was totally incompetent. I'm hoping someone more competent comes up in England. Because London, like, I've been to London, I think 4 or 5 times, once per year at least. And progressively, the city has been getting shittier, right? So more dirty, more dangerous, people very scared on the streets, a lot of mess on the streets, not a good sign. And a lot of English people were actually moving out of London because of all the crime. So I'm hoping it can be fixed, because London as a city is beautiful, right? Economic data. Right now, I definitely would not recommend going to London. That's kind of my main point. GBP. So it's fine. Or is it fine? I mean, you had 4 prints of 0.1%. I would say that is pretty low. The latest print was fine, but net, I would say not such a great situation. Inflation, let's take a look. GBP, 2.8. So that it's okay. It's above target. The target is 2%, but it's not like in the US. Inflation in the US is highly elevated. So PPI 4%. PPI is definitely high. But if you look at the unemployment, I would say that's the main issue right there. So if you look at the unemployment, you go to the GBP and 4.9%. So 4.9% and rising. If we zoom out a bit, 2 years. So here you can see it has been rising. We started 4.2 in Jan 2024. Now it's at 4.9%. I would say that's problematic. I still think the dollar is bullish. I still think a rate hike this year could be on the table. The data is telling me absolutely inflation is still high in the United States. The economic data of the jobs market is fine. So the Fed can actually do a rate hike without hurting the economy, which is a big plus. The Strait of Hormuz, I know it's been open and then it has been closed and then it's open again. I don't know what the hell is happening there, but I'm still thinking there's going to be extra pressure on oil, extra pressure on inflation. We can check the price of oil. So let's go to Brent. I'm so happy that the markets have opened. Like it's been, 3 days that the markets have been closed. It was pretty boring. So I'm just happy that the markets are opened, are back open again. Brent falling lower. Okay. So that's positive. If you're following the conflict, this is definitely positive. Although I still think the area has a lot of issues. So I still think dollar goes up. There's US exceptionalism. People from all over the world are buying US stocks. What do you need to buy US stocks? You need US dollars. So the dollar is getting bullish, let's say, confluences across the map. And the UK, although you're getting Comrade Keir stepping down, which is considered bullish, the economic situation is still bearish. So I would say selling GU is still the best game plan. If we look at the last positions I had 2 winners. I'm looking for a third one. Of course, it's not a guarantee. My win rate is only 45 to 50%, but I'm willing to take this risk every day of the week. Okay. By the way, if you want to get all of my positions, all of my trades, make sure to join the A1 Discord. You can click the link in the description and you can use the code Marco to get 25% off. So you get Nick, Iwind, Alan, Chris Pulver, and me. You get all of our trades and you get a community with, I would say, some of the best traders in this sort of online niche, right? Because 95% of the trading niche is scammers. So there's only a small chunk of people that are actually profitable and actually trading. I think a lot of them are in the A1 Discord. So yeah. Also, give me 1 second to go grab a glass of water because my throat is a bit. My throat is acting up. I don't know why. But anyways, maybe it's because of the AC. I don't know how you guys in the US handle the constant AC because like I have the AC turned on for 3 hours and I don't know, my throat just starts hurting. And I know people in the US usually live in AC. You have AC during the night and everything. Europe is completely different, but let's see comments. Marco, what are your top 3 favorite books? That's a good question. I know James was talking about this. And yes, most of the books won't really help you to find the trading edge. But I would say for motivation, they're very, very important. I know Market Wizard series is my favorite trading book out of all of them. Then you have The Mental Game of Trading, which is pretty good. You have stuff from Mark Douglas if you want to work in your psychology. But what I noticed, the main problem for retail traders is not psychology. It is the first thing. It is that they don't have an edge. So your psychology can be solid, but if you don't have an edge, if you're trading lines on a chart and only lines on a chart, you're just not going to make money in the markets. So get an edge first, and then taking care of the psychology will be easy. But I would say, and The Alpha Trader by Brent Donnelly, that one is a game changer, I would say as well. So the Alpha Trader, okay? Book. This one. This one is amazing by Brent Donnelly. And actually, the Market Wizard series and the Alpha Trader will give you a rough guideline of how you can build a trading edge. For example, the latest book from the Market Wizard series, which I'm currently listening as an audiobook, which is audiobooks are great, but it actually gave me an edge for trading stocks. Like the main strategy that I'm using right now to trade stocks and forward test the stocks approach is from the book. One of the traders did a detailed breakdown of his strategy. I then found his social media. I think most of you actually know about him. So it's this guy. It's not Quagmire, it's Squalmagi. I think he is from Sweden. So he has 3 timeless setups that have made me tens of millions. I'm using the first one for now. So breakouts, super easy, super easy. What's tough is to get the right market conditions. So you need for the S&P and for the Nasdaq to be in an uptrend, right? As I mentioned at the start, this is not good. This is good. The current market conditions are perfect for a breakout strategy on individual stocks. So if you want to read something, read the New Market Wizards, read The Alpha Trader by Brent Donnelly, and get something from Mark Douglas as well. Other stuff, I would say, is just not necessary. Chart time and research and fundamental research and economic data and central banks, that's what's going to actually help your trading. And joining the A1 Discord as well. That's going to be a big help. Nick looks different today. Yeah, I have a beard, I have glasses, but I think the hair is pretty similar, wouldn't you say? And the shirt, I think he also has these polo shirts, so it's close enough. It's close enough. The account is definitely smaller. I have to admit that. Gold. Okay, let's take a look at the gold. Gold. Personally, I don't want to touch gold at the moment. I tried a position, got taken out. I think this actually could be a nice area for gold to bottom out, but it's not convincing enough. And the effect that I'm seeing is gold is acting as a risk-on asset only during a sell-off. So it's only selling off. It's not really going up. Like when the S&P was selling off, gold was selling off as well. But when the S&P was going up, gold just did nothing. Gold stayed flat. So personally, I think there's better things to trade right now, and I wouldn't touch gold. Hello, Marco. Is the DNA funded giveaway over? Yes, for now it is. As someone from a Commonwealth nation, I hope they fix their problem soon. Yeah, I think you're referring to the UK. I'm hoping the same thing, because London is a great city, and English people are nice. They don't deserve that their city is being destroyed. I mean, maybe they deserve it because of all of the colonial stuff that they did from all over the world. So maybe it's karma coming back. But I'm just a 20-something-year-old guy on the internet. So what do I know? I like English people in general, and London is pretty. Gold. Hello, Marco. Is the Ola Prime giveaway ready? No, unfortunately, we haven't yet taken care of that. We're still the team is working on it in the background, so I'm sure it will be ready pretty soon. English people are nice. Well, the ones that I hang out with were pretty nice. They were traders, so traders usually tend to be open-minded. Since we're talking about Ola Prime, I do want to mention you can get 35% off with the code A1 Live. Okay, so the code is A1 Live, and it gets you 35% off any Ola Prime challenge. So Ola Prime actually has some really good reviews on Trustpilot. They have a score of 4.5, which is pretty high, trust me. Like I've been in this space for a long time, and 4.6 now, that's tough to get. Okay. So 35% off, which means you get a better price than, let's say, FTMO, which is pretty good, because I would say Ola Prime and FTMO right now are, and 5%ers, 3 best prop firms in the game at the moment. Maybe E8 markets as well, but with the code A1 Live, you absolutely get the cheapest price by going with Ola Prime. The link is in the description if you want to take a look. And they don't have a consistency rule, which if you're a swing trader, the consistency rule with prop firms can really F up your trading. So that's a big, big plus. Marco is on something, I think. Hello, everyone. Hello, Bashi. Welcome to the stream. How do you see the pound Aussie retracement? We can take a look. Shall I start the Market Wizards from the start or just the latest book? I would go with the latest book. I wouldn't waste too much time. I would go with the latest book because that one is the most important for you right now. So yes, all of the books are super entertaining, but the strategies that the traders were using when the series started no longer work so well. So if you read the latest one, you're going to get the latest strategies, the latest insights, and it'll actually be applicable to the current markets. That's why I recommend reading the last one and starting from that point. Pound Aussie, Pound Aussie. Let's take a look. GBP AUD. Pound Aussie. It looks pretty flat at the moment. So if I put it into the top setups page, GBP AUD, neutral, okay. I know I'm definitely bearish on the pound, but what is the Aussie doing lately? I really don't have I don't have a massive bias. So I'm not long, I'm not short on the Aussie. I would say with the pound Aussie, I'm being more patient. And the price action agrees with me, and the edge finder agrees. So a neutral score. This looks pretty flat at the moment. Again, I think there's better opportunities out there. I think selling pound USD. Let's just remove this. Selling USD JPY. Okay, but it's flying at the moment. This is purely a bet on an intervention. Buying stocks on pullbacks. Absolutely. So I have on the watch list the Nikkei, sorry, the Nasdaq and the Nikkei. I'm looking for a pullback to a specific level of support. Let's say this one would be nice. So 69, 69 on the Nikkei, and on the Nasdaq, I have, I don't know, let's say 30. It's a round number, would be nice. Would be, of course, nice to see a breakout first and then a pullback, something like this. I think that would work as well. So that's on the radar. That's what I'm watching. Let's see, what else do we have in terms of comments? How are you doing, Marco? Trade's going well? Actually, pretty good. Yeah, my results have been really, really good for 2026. The conditions have been nice. Everything seems to be falling in line, so it seems to be a very good year. And trading works that way. So you have good years, you have bad years, you have rockstar years, and you have break-even years. This one is going really good so far, so I can't complain. You can find my track record on DarwinX 0 if you're interested. So just search up OHGE. So that's my ticker on DarwinX. OHGE. See? That one. Hi, Marco. Can we break down the DXY? Seems like all the indicators looking at overbought. I'm looking for a retracement. What's your view short term? Well, let's bring it up. Are we stuck at a level of resistance? No, we actually cleared resistance. So we actually cleared this level and we are continuing higher, which is good. That's really bullish. I'm bullish. I'm looking for sell setups on GU. I think this goes up short term. I think this goes up long term. I think we do get I think there's a high chance we get a rate hike this year. That's definitely bullish for the USD. So I'm looking to buy the dollar. That seems to be the best way to go at the moment. It is the most obvious trade. I know that the indicators are overbought, but they can stay overbought for weeks. So indicators are not to be trusted. That's why I avoid them. They don't work in my personal opinion, but I know traders that do use them and do make money. So it's all subjective. You know, if you did read the Market Wizards books, you would know that pretty much every single strategy works in the right hands. So you can't really knock any strategy because there's some trader out there making millions by using it. It's just, what do you like? What are you good at? That's the question. Sluggy, welcome. Let's see, what else do we have? Looking to long gold to the target zone. GBP CAD, I'm currently in the buy, but looking to get out. GBP CAD. Okay, this is going to be the last one for today. Gold, I did talk about a bit earlier. I don't have a big opinion on gold. Oh, I don't know. This is stuck in a range. So if you're in a buy position, this is not financial advice, but personally, we're now at a level of resistance. I'm bearish on the British pound. I am also bearish on the Canadian dollar, but I'm bearish on the British pound. So I'm bearish on both. I don't think there's a huge edge in buying GBP CAD, but that's just me. Maybe you have a different strategy. So this looks pretty bad in my personal opinion. That is it from me. Do not go anywhere because you have Tiger coming on in 30 seconds. I want to remind you to use the code A1 Live if you want to get an account with Ola Prime. I wish you good luck in the markets, and you can catch me every single day of this week, except on the weekend. So thank you. See you in the next one.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1 Live. That's A1 Live for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
All right. Good morning, everybody. Happy Monday. Must be something in the air because I've got a bug myself. I think I ate some meat that didn't get cooked well over the weekend, so I'm feeling it today. I'm hurting, but I'm here for the people. I'll get some medicine afterwards, take a nap. I think I'll be good. But anyway, that is the status of me today. Kind of like Nick, I wasn't even on the charts like he mentioned earlier. I was not on the charts at all yesterday like I normally am. I was basically just sick as a dog. So I feel a little better today, not too much, but enough to come and see you guys. So some pork loin, Bashy. Yeah, get some, it's marinated pork loin. And the day before that was a chicken. And I noticed a little pink in both times. So just didn't get it cooked enough. And yeah, I could definitely feel it. But who cares about me? I'm fine. I'll survive. Guys, you guys asked about books while Marco was on. So I looked at my bookshelf. I pulled out a few ideas for you. With books, the important thing, I think, the most important thing about book reading is the psychology side of things. Not so much the technicals like what they were saying. A lot of books can get you into trouble on outdated material or material without context. But I did pull out a few of my favorites. The first book I ever read in middle school, The Quality of Courage by Mickey Mantle, by a baseball player. Guys, it's an awesome story. The man was just about to retire because he was batting a 188, I think it was, in his high A ball, almost quit. His father got onto his behind and he kind of something snapped. And obviously he turned into the great he's in. But the most important book, my favorite book, the one that changed my life the most, The Magic of Thinking Big by Dr. Schwartz. Guys, it tells you how to think, not to waste our brain just storing facts. Okay. We're not all Jeopardy stars. We don't need to be this fast and this fast about saying, about answering questions. When it comes to the charts, again, we just want to think. We want to understand how to think. And that book will really, really help you out. Greatest salesman in the world. Now, it's not teaching you how to sell. It is teaching you how to sell, but it's all about, again, the mindset, guys. Dale Carnegie. Anything you can get your hands on Dale Carnegie, How to Win Friends and Influence People. Again, this is just helping you with the psychology of people, because at the end of the day, we're not trading a chart. We're trading human behavior. Okay. The fear and the greed, and understanding that relationship is super, super powerful. The power of positive thinking. I know that's kind of hard to see. That's another really good book to read. Norman Vincent Peale, guys. If you get your hands on this book, it's gonna help you to think a little better. Think and Grow Rich. Napoleon Hill, classic. Anything you can get your hands on with Napoleon Hill, that's the route to go. What about trading books? What about actual trading books? Well, Kathy Lean, okay, Little Book of Currency Trading. I'm a currency trader at heart, so I definitely wanted to get my hands on that. And she's really good at explaining concepts on there. The guys already mentioned it, but obviously Market Wizards, Jack Schwager, anything you can get your hands on with him, along with the new Market Wizards. And then I do know that there is a newer book, and I haven't even read it, so I have to get on the ball. And another really good one, the final one, guys, The Complete Turtle Trader. This is a really, really cool story. The thing I got out of that book the most was being patient and not trying to hit the jackpot, hit the lottery. It's just all about slow, steady growth. The turtle, okay? The tortoise, the story of the tortoise and the hare, kind of a similar concept. But the turtle wins, just slow and steady. That's what wins the race, okay? We don't want to blow ourselves out, blow our accounts. We have to understand this is a marathon. It's not a sprint. So that's just a couple. Yeah, Trading in the Zone. Yeah, that's a good one too. Was that Mark Douglas, I think? Yeah, I didn't have that book in my shelf. I loaned it out to somebody. I never got it back. So yeah, definitely another good one. But that'll give you guys some ideas there for stuff to read. Again, a lot of them, guys, they're kind of like what the guys said. It's just outdated stuff. I mean, if you just type in top trading books, you'll find the Market Wizards on here. But then you'll start seeing some things that get into more. Oh, and this is another one, Jesse Livermore. Guys, anything you can read about him will help you out for sure. Again, it's teaching patience, okay? Naked Forex. I like it because I just like the supply and demand zones. I don't rely too much on all the fancy indicators. The chart is the best indicator in my book. And then, yeah, Market Wizards. That's the newer one, I think. Stock Market Wizards, Jack Schwager. Yeah, I wouldn't worry too much about some of these other technical books, though. Again, that's the stuff that you want to learn on your own, getting your 10,000 hours of chart time out of the way. So anyway, just wanted to throw that out there in case you guys are looking for some info. I just went through a growth journey in my late teens, early 20s, throughout my 20s, I should say. That's where I read the bulk of my books, but it just helps you with mindset, guys. Again, the strategy you figure out on the charts along the way. So get here on, yeah, there's plenty of them. There's plenty of them out there. So anyway, guys, let me know in the chat if you have any specific tickers. Let me just double check up here. Yeah, yes, Bashy, yes, with your little blue men up there. That's it. Can't stay off it. Anyway, FTSE 100 got a little stronger this morning. Obviously, we got Keir Starmer. It's kind of funny because President Trump actually was the one, I think, that broke the news that he was resigning. And then, of course, he had to come out and do his thing to mention it. So it's going to be interesting to be watching the pound for a while, see how it affects it. If we go to the British Pound Index, looks like so far the market likes it. It's actually gapped up this morning. This is a 5-minute chart, so it's still early, but this thing's just been plummeting of late. Talking about the British Pound Index here, and we did get that last bounce on the last zone I drew up back here at the end of March. Got a big push up, but it's been retracing ever since. So there's another zone of demand at down here at the 131.20 level, guys. As always, for me personally, as a supply and demand zone trader, my goal is always to, if I buy into a pound trade, I want to see it also on the index also bounce into a similar zone. Okay, it's just an added layer of confluence that I personally like to use, and yeah, it works pretty well. Okay, the psychology behind, again, people, trading psychology. That's basically what it is, trading behavior. So as far as zone a little higher, there is a daily zone up here. If we do happen to get a push up, you can definitely see a little bit of a bounce if it gets up there. I don't know. But yeah, we're kind of in some not uncharted territory. This is now the 7th new prime minister that they've had in the last decade. They can't keep a steady person in there. It's crazy. So yeah, going to be interesting to see how this works. Sounds like the new potential incoming prime minister might be even farther left than Keir Starmer. So not sure what kind of a relationship that's going to be like with President Trump. I guess we'll find out. But at the end of the day, hopefully they come to some middle ground on some things. So anyway, what else we got? Let's go look at that FTSE, one that we haven't looked at in a while, or at least I haven't. Looks like the last zone I drew up over here was a 4-hour zone that got bounced into with a little bit of a push up. This is a little too congestion-y for me, guys. We're still kind of like oil was for a long time. Just it's basically getting coiled in here, coiling in on itself. So I have a zone drawn up here. I have a couple zones. So we got obviously the daily, which I think is probably a little on the weaker side, talking about this red candle here. When we got the push out, we didn't even break a structure or the overhead supply. So I think that the daily is probably going to be a little bit off limits as far as me utilizing it as that higher time frame set of eyeballs I tell you guys I like to use. But nevertheless, if we drop down into a 4-hour time frame, on the left side, we do have a zone of demand all the way down here at the bottom, close to the origin of this overall strong move up that did break some minor structures. I don't want to call these major structures, but did break some minor structures, broke a supply here, and then it started testing into the top end of this congestion that we had back in late May. So I am interested to see what we have down here. Now, you see I did draw up another zone. I think that was a 2-hour zone, a little higher up on the curve. And it was far enough away to where it could possibly give us, kind of a new rally-based rally, a little bit of zone of demand in here. I drew it up on a 2-hour, but I just wasn't quite feeling it. We did get our Sunday gap out of it, or gap into it rather, yesterday here in the States, and it looks like we are starting to get a little bit of lift off. So perhaps this 2-hour zone might have been enough to give it a push up. But if anything, me personally, I wouldn't have wanted to trade this just because it didn't touch the daily. You guys see how quick or how close it got. How close it got to the daily, which the proximal line is basically right here. Okay. So it's basically just bouncing off a 2-hour zone at the moment. But hey, sometimes those smaller time frames, those smaller time frame zones have enough power to lift off. So currently that's what we're seeing. But if it ends up rolling back over, I'm basically waiting on that 10,193 level because, again, I think that's the prettier picture. It's the cheapest zone. It's got a big inefficiency ahead of it, okay, where demand heavily exceeded supply. So that's what I'm currently watching. If we can get a drop into that price point, might be a possible buy down there. But again, just looking at the context of this thing, pretty well getting squished sideways in here. So it's going to be kind of one of those sideways trend type trades. Okay. Buy it on the low end, sell it at the top end, because there is a double top up here just ahead of this supply zone I told you guys about, the daily supply. So this would at least be a zone of discount to keep an eye on. So I like it. Low on the curve as well. Okay. If I'm looking at swing low down here, swing high up here, this is obviously low on the curve. So discount zone, discount area that I'm looking at. Dollar yen, guys, it's real close to prices not seen since 1986. Look at this. Look at this. Let's go to a monthly chart. The last time we were at these price levels was 2014, the summer of 2014. Which did pierce into the 1986 price points. But if we go just a little higher, which we're not far away from, let me zoom in again real quick here. Let's go 1 hour. So this is that weekly supply. And then this zone up here is that daily supply. So I've been telling you guys nonstop about that 161.25 level that I was looking at for possible intervention, and it went a little bit higher. Okay. It went to the distal line of this daily supply. And if we go to a 1-minute chart, I don't think I talked about this on Friday. I don't think I did. Let me see here. Thursday. Or maybe I did. I can't remember, but I'll just do it again real quick. But anyway, yeah, when price got up here to the distal line of the daily, you can see it went sideways, and that's where the bottom fell out of it. But it didn't hold. How many times has the Bank of Japan done a little bit of intervention, and it's just not holding? It keeps retracing. So same thing here. But it had an 80 pip drop within that minute, and then it closed at 34.5 pips down. So it retraced a bunch. There were some buyers waiting on this thing. So poor guys, they just can't get this to stick. Because again, if we go back to a day or a 1 hour chart. Right here's the 1 hour candle where that intervention, the suspected intervention, took place. And now we've already retraced it all. So we're revisiting, just to go back to the concept, revisiting the monthly price points from 1986. Winter 1986. I was a toddler. I was a 4-year-old. Snotty-nosed 4-year-old running around outside without my shoes on. The last time prices were at this level. And I think that this intervention level, I talked about this morning on some other content I was doing. It's really not, I don't think it's a wonder why they like to intervene in this general area, this 159, 160, 161 area. Because if you think about it, if we break and close above this, you've got a long ways to go before running into any substantial supply on a monthly. I mean, we're talking clear up here at the 236 price point. I look at this waterfall down, a monthly waterfall. This would have been 1985. Okay. If we break and close up here, there's just not really, I don't think there's a lot there. It very easily could waterfall up to that next major supply. Again, looking at it on a monthly, and that's without even looking at weekly and daily. So it's no surprise to me that they want to continue to, defend this area like they did back in 2024. So we'll see. We'll see what the heck happens with it. But yeah, they apparently can't buy enough yen. I told you guys last week it was $74 billion intervention from that website I showed you guys. Yeah, we did talk about this. I forgot. But anyway, as far as an actual play on this, yeah, it's the same thing. I want to see a break and close above it. Break and close. If we can get that, I've got a 4-hour zone down here a little deeper. I am watching at this price point here. That is the 160.34 level. But breaking and closing above the rest of this weekly is really going to go a long ways into seeing if I personally want to do this, because I just need a retracement at that point. And that's a long ways down. Couple 250 pips retracement down just to find the unfilled order potential that lies here with a strong volume spread analysis candle on the leg out with a gap. Okay. So yeah, that's the play I'm looking at for dollar yen, since it is still giving us a nice bullish signal, +6. And when it comes to the indices, guys, they're obviously bullish there as well. Let me refresh my chat so I can see you guys. Mini intervention. Yep. Yeah, Bessie. Yep. So, hey, I guess $74 billion wasn't enough, right? But anyway, as far as the indices go, guys, really the deciding factor, because we got Nasdaq, we got Dow, they're both +7s. We got the S&P at a +5, just barely makes the cut. The one I think I like the most is the Nasdaq, and here's why. It's because of the COT report. If we go to the COT report that was updated on Friday after the bell, you can see it and the Dow both had a 3.5% net change, week-to-week net change. So that's bullish on both of them, pretty darn bullish. Okay. But what I like about the Nasdaq is it actually increased a substantial amount of long contracts, whereas the Dow actually got rid of some long contracts. But it got rid of so many short contracts relative to its total number that's why it did end up getting a 3.5% rating. But I personally look at the Nasdaq as just a little more bullish because of the fact that they increased longs as well. So increased longs, cover 9,500 shorts. Okay, that's a pretty bullish number all on its own. Both of these numbers are bullish. This one down here, not really so bullish, but again, it was given a bullish rating because it had so many shorts closed relative to the total position. Okay, so you can't really go wrong either way. I'm just basically splitting hairs here. I personally like the Nasdaq better, mainly because of the COT report. So let's go have a look at those from a technical level. And here we go, Nasdaq. Now, when it comes to this Nasdaq, I'm still waiting on it, along with a lot of assets, to be quite honest with you. Still waiting on it to break structure and close first. That's really what I want to see, just like I showed on the dollar yen. And a lot of the dollar pairs where the dollar is the quote currency as well. Just need to see some structural breaks first to prove that these zones I'm watching is actually pretty strong. So if we get that break and close, got this level down here, 29,029 to be exact, 0.8. Okay. But that is a 4-hour demand, strong gap out. It did get a little weak, okay, for about 4, 8, 12, 16 hours or so before finally catching another bid and pushing up and giving us our Sunday gap that we had last week. So, and the volume was the strongest on this zone here. But you see, I did draw another zone of demand. This also has a gap, and it's at the origin of this overall strong move up. So why not take that one? Why not? Why not, Tiger? Well, it's mainly because of the volume. I just don't like the picture of the volume on this particular candle right here. Okay, we're looking at just green candles. We're looking at average volume. I don't like trading average volume. I like trading above average or above average volume. Okay. So that's why I'm looking at this leg out and this basing candle, which both had yellow candles. Ultra high volume. Okay? That's what I want to see. So I would personally, and not to mention, you got the 50 EMA above the 200 EMA, which is what I like to see. I want to see price pierce the 200. Okay. Again, that 200 EMA is a pretty good moving average where you do tend to get a lot of activity. So that would paint a pretty good picture in my opinion. So I'd be looking at this zone up here. This one, while it is weaker, I still want to respect it because it is at the origin of this move up I mentioned. And that's why I personally would just put a stop loss below all of it. So basically treat it as one bigger zone. It's the way I would do it. I would probably be afraid. I'd be afraid of putting a stop loss just underneath this top 4-hour demand like that. Because how many times do we pick a good spot where price comes in and bounces into wherever, and it goes a little deeper, and it stops us out, and then price goes in the direction we thought it was going to go anyway. We've all had that happen countless times in our life. So that's just kind of my way of solving it, is give it a little more wiggle room and still respect this zone that I still think is weak for all the reasons. But it is the bottom of the structure, so I got to respect it, especially because it's a zone on top of a zone. There's no space between the zones. And it looks like it just barely missed it anyway. Yeah. So we're price based again. And you can see right here, it just barely missed the zone. Just barely missed the top of this wick. So anyway, that's my favorite play if we're just talking indices for a second. The other two, similar structures, okay? The Dow, which we just went over, it's another +7. Didn't quite get the love on the long side, but it did get quite a bit of love on the short side. So we do have zone structures over here, down here. Now, one thing that the Dow has going for it is that it did break structure. It broke this line. So that's the one thing I'm waiting on over here on the Nasdaq, is break the structure. So yeah, 1A and 1B. I just wished it were the other way around. I wished we'd already broken the structure here, but just need more information. And then looking at the S&P, it did bounce into that relatively same supply zone, the daily supply, strong gap down, and we're just kind of going sideways off of it. So it did already drop into this demand down here. I think it's a weaker one though, because there's no volume on this leg out. That's a pretty puny leg if you ask me. So I wouldn't want to utilize this area. That's why I'm looking a little closer to home over here. Just 4-hour. It's 4-hour time frame. So that's kind of the look on the indices. At the end of the day, if we get price returning to all these zones, like I mentioned, my favorite is the NASI. But if it does not break this structure and it just returns, well, then I might look the way of the Dow because it did break the structure. Okay. So it's really just an if-then situation. I'll take whichever. I would even probably take this, but if it doesn't break structure and it returns, well, then maybe I'll just take off a little bit of risk. Okay. That's kind of the way I would treat that. So I'll take whichever looks the prettiest when price returns. And then as far as the other items, euro dollar shorts, gold and silver still on the list, bearish. Take a quick look at a couple of these for you real quick, guys. Most bearish one here. I've got two situations here. Got a supply zone, obviously up here. This is our daily with a 2-hour confluence. Talk about this little green candle right here. So for me personally, that would be my entry. It's taken the eyeballs and the orders from the daily traders, and I just want to see one more set, guys. I want to see one more set of eyeballs on it. I think that might be the 2-hour set of eyeballs watching there, or even the 1 hour. I mean, if we go to a 1 hour, it's going to look pretty similar. So that's the confluence point that I'm personally waiting on for euro dollar. There's no denying the strength of this drop. You had two big candles. That's what I tell you guys all the time. I want to see at minimum is two big candles exiting the zone, and that's the 1 hour look. Okay, and then it kind of it was a drop, and it kind of based again, and then we got another drop out of there. Now that's that zone, but we have another zone that I can't ignore. Okay, we had a former double bottom over here to the left, and it's going just under that supply zone, that 4-hour one that is created there from Wednesday. Okay, Wednesday night, Wednesday evening here in the States, that broke a demand zone. Talking about this 4-hour job from way back here. It was a pretty good looking demand at one time. Price just pierced through it like a hot knife through butter. There were no green candles on a 4-hour chart when price entered through and ended up closing pretty forcefully underneath it. So I don't want to ignore that zone. It is lower on the curve. It is in the middle. It is that kind of diddle in the middle spot that I tell you guys I don't really like trading very often. But there's just a few reasons why this might be an exception to the rule. Again, the double bottom, the former support becoming resistance. The fact that the zone, like I said, broke through that strong looking demand zone at one time. The volume picture could have been better on the leg out, the first red candle, but it kind of picked up a little more steam once you got down to this demand because there's unfilled orders. So that's why you see yellow candles down here. Okay. There's unfilled orders and that they got transacted, but the sellers still won the fight and pushed price down. So I want to keep an eye on this zone here. I actually don't even have an alert set there. Let me get that on. Get that set up since that is my current favorite bearish. Perhaps a smaller position on the bottom zone and more of a fuller position if it chews through that and goes up to that higher zone. That's the picture that that's kind of the strategy I would have on this. So the yellow projection line, maybe a little less on the risk, a little fuller risk up top since I've got higher time frame confluence with the daily. Strong daily candle, guys. The volume picked up. It wasn't yellow, but it was a big green candle, and that's better than nothing. Okay, so that is the look for me on euro dollar. And guys, as always, definitely check out Nick's code A1 Live if you are looking for a new account, new prop account with Ola Prime. Go check them out. You got the code there on the screen. You got the QR code as well. Just put it in that second line until we get the code. I think he's still working on getting the code to work in the top section, but I've tested it last week and the bottom one does work well. So if you get, because I know a couple of you were asking about it. So just wanted to remind you guys a few times about that. But yeah, go check it out. Check it out. Having a look at the rest of these pairs with the dollar. And let's see, we had Aussie, we had Kiwi, pound, Aussie, euro dollars. Okay. Yeah, and see, when it comes to the Aussie dollar picture, there's a couple zones. And I can tell you right now that euro dollar looks better, I think, because we have yet to break this demand zone down here. We already saw the euro dollar broke this zone, okay, right here. But so far, the Aussie hasn't. So that's an easy pick of the euro dollar over the Aussie dollar for that one reason alone. But there is a nice zone up top, a lot of volume, so we can't ignore that. If this one ends up breaking through the zone, well, then I might favor this one a little more because of how strong that VSA candle was on the way out. Okay. So just need more information to see if that one ends up, looking a little better. Pound dollar, got all kinds of zones up here. Just depends how far away we get. We have broken the equivalent demand zone as well over here. We got a little bit of a reaction from it. You had a lot of volume kick in right there, but then it ended up rolling back over. So look at this thing on a 4-hour chart. We got the very same supply zone that we see on the euro dollar, which is what I'd be keeping my eyes on. Former support, possibly becoming resistance right at the proximal line of this supply zone. So definitely want to keep my eyes on it. And then we also said Kiwi dollar. Yeah, Kiwi dollar still has some work to do because we haven't even broken through this demand yet. I've already drawn this picture up over here. Break and close, retrace for a possible short. But there's a lot of work that one needs to do, I think. And then gold and silver, wanted to touch on that real quick for you guys. I know that's one of the popular ones in this group. Yeah, and I'm still waiting on this return to 44.28. It's that daily 4-hour confluence. I told you guys about this 4-hour zone down here last week. I just didn't quite like the look of it, but as you can see, it's proven me to be wrong because it did end up catching enough unfilled orders to drop down. And right in here's where we'd be taking profits anyway. For me personally, taking profits just ahead of demand, and also a former, looks like, yeah, the former support that we had back in March is going right through that. So would have definitely been out of the trade anyway. I would have probably not quite hit the TP on this because I would have probably put it down a little deeper. It came close, but nevertheless, red line is what I'm waiting for if I want a return to some zones. Yellow line is what I'd be looking for if we do get a breakdown of this demand zone and this swing low. Okay, break and close. Let's push back up and find a new supply zone. Try to collect some unfilled order potential to push price to sell somewhere in this area. Okay. Again, need more information, so don't have a play on it just yet. And ladies and gents, my goodness, the time is up. I'm going to go take some Imodium or Pepto or something and cry, and hopefully I'll feel better tomorrow. So anyway, ladies and gents, hope you learned something. So much volume in the lower zone, right? Would make you still make this trade. Let me answer your question real quick. Sorry, James. Talking about euro dollar and the VSA, and it's showing that much volume on the lower zone, right? Yeah, no, that's a good call out. But what I like is it broke a zone. Remember, it takes a lot of money to break a zone. Okay, we got this zone break here. So that's really the only reason. Same thing on the pound dollars because it broke that supply, or this demand rather. This was a strong looking demand over here. I do believe, yeah, structure wise, maybe not so much on the volume, but it had nothing but green candles for a while. Acceleration gaps, runaway gaps, and it's in the bottom third of the swing low, swing high down here. So looked pretty strong, but that's why I say I don't trust it enough to put in a full position here. This would just probably be a partial or a tester position, and if price chews through, take a small stop loss, and then wait for the better looking zone a little higher up. So sorry for going over. Hope that makes sense. Guys, stay safe out there. I'm going to do some homework on this Keir Starmer situation, and yeah, we'll be back tomorrow for more. So take care.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.